Hi, this is Kevin Davey, and here's another 2-minute trading tip. Today's tip: perform walk forward testing. So if you're testing a strategy and you want to see if it works historically, there's a lot of different ways to evaluate it. I use walk forward testing. Why? Well, let's take a look. Here's some different kind of testing. If you do a traditional back test, and let's say you test up till the end of 2014, and then you decide to go live in 2015. All the area in red is going to be what's called in-sample data, meaning the results you see are the same results that you tested over. So everything is in sample, and you're going to get unrealistically good results. A better way is to do out-of-sample testing, where you test a small piece of the data, let's say 5 years, and then you validate it with a couple years of out-of-sample testing. The out-of-sample results will be much more indicative of what you might get real-time trading. The best way, though, is to do something called walk-forward testing. And by doing walk-forward testing, you test for small periods of time of in-sample, and then you run on a small out-of-sample time period. And then you connect all these out-of-sample, all the green. So you can see, compared to out-of-sample, you get a lot more data with walk-forward, a lot of out-of-sample data, much more than traditional back testing. So that's why I use walk-forward testing. If you don't know about walk-forward testing, I help teach it in my strategy workshop. There's plenty of stuff on the internet about it. I recommend you learn about it. Thanks for watching. Check back soon for more trading tips.